Good afternoon, and thank you so much for joining us today for our executive sessions briefing. My name is Abed Delgado. I'm the Digital Marketing Director for America's Market Intelligence, and I'm going to be serving as the moderator for today's discussion. So before we get started, we just want to give you a quick idea of what to expect. We're going to have about 35 minutes or so of presentation, and then we're going to open up the floor for questions. You can ask us questions, though, at any point in time during the webinar. The way to do it is if you look at your screen, you should have sort of a panelist participation panel, so to speak, and there you're going to see a series of icons. One is going to be called Q&A. You click on that, and it brings up a window. You type in your question in the window, hit enter, and we'll receive it. So as the presentation unfolds, feel free to just fire away questions at any point in time, and we'll get to as many as we can at the end of the executive sessions here. Now, one question that we always get is whether the materials are going to be available. So I just want to answer that one up front. Yes, absolutely. Within 24 to 48 hours after the event itself, we basically send out the materials to all the registrants. So you should receive those in that time frame. All right. So let's move on now to our legal notice here. I'm not going to read this word for word because it just will take away from the time we want to dedicate to the presentation itself. It basically talks about our efforts to verify the data and our lack of liability with the data that we're sharing today. So I urge you to read that at your leisure. And let's move on now to our speakers. I'm going to let them introduce themselves, starting with Lindsay Lear, the leader of the payments practice here at AMI.
Thank you, Abel. Good afternoon. Good morning, everyone. Thank you very much for being here. We're very pleased to bring you this executive briefing to our trusted and honored and treasured group of clients and intimate network. So thank you for being here. I'm joined by my two colleagues who will help me deliver the content today, and I'll let them introduce themselves.
Hi, everyone. Thanks for joining. My name is Andreas Farge, and I'm a senior analyst at AMI. I've been supporting the payments team, focusing on social media, e-commerce, payment methods, and payment systems. And I'm really looking forward to today's conversation.
Good morning, good afternoon, everyone. Thank you so much for joining us. My name is Tim Jakelich. I am also senior analyst with AMI's payments practice, where I lead our research efforts into cryptocurrency and blockchain technology, focusing especially on how those can help move money across borders. So really delighted to have the chance to discuss those with you today.
All right, so now I think we're ready to begin. I'm going to turn the floor over to Lindsay to lead us through the first portion of our presentation. Lindsay.
Thank you. All right, well, let's get to it. So today we're going to have about 35 minutes of presentation. We'll have about 10 minutes at the end for questions, and then happy to stay on later if there are additional questions and people are hanging out with us. So we're going to try to get through this power session, bring you some powerful insights in a more condensed session today. So the reason that we're hosting this webinar is because we're almost at the end of the year. It's been a very tumultuous 18 months. It's been a boom year for AMI. I know it has for many of our clients. Digital payments has accelerated by more than 2 years, according to different voices in the industry. So we wanted to take this opportunity to take stock. What has happened in 2021, now that economies have started to reopen, now that consumers and merchants and banks and others have gone through this phase of digitization, what habits are sticking, what has been the impact, and what are some forecasts for 2022? And what we're going to be bringing to you today is evidence that after more than 10 years of the movement of digitization in Latin America, cash is truly starting to decline, and money is truly starting to move differently in the region. We're going to show you data that supports this and what we think this means for you and your business going into the next year. So if we take a look to the next slide, just to lay the context a little bit. You know, we've talked a lot about economic recovery. A couple of weeks ago, we had a forecast from a macro economic perspective, looking at what's happening in the region. Good news is that we expect the region overall to fully recover to 2019 levels in terms of consumer expenditure. The region was hit hard during the pandemic, GDP growth falling around 7%. Really devastating, especially for informal sectors of the economy. GDP is going to grow in 2022, 3%, but more poignantly for our industry, consumer expenditure is expected to grow about 12% in our top 6 countries. Now, not every recovery is equal. We see Brazil 2020 levels still trailing 2019, same in Argentina and Peru just slightly, but we see full recovery and exceeding 2019 levels in Mexico, Chile, and Colombia. And overall for the region, we expect this to be more or less equal or slightly better than 2019. So great news, consumers are spending again, although maybe those spending habits will have shifted categories as we know, but we can start the year on an optimistic note. Okay, and as we go to the next slide, this just provides some very baseline evidence of the impact of digitization throughout this year. Overall, again, when we're thinking about consumer expenditure, household expenditure, we're looking at $2.6 trillion in 2021. Again, as I mentioned, 12% growth over 2020. And this just provides a breakdown of how these different segments of payments compare to the overall pie. If we consider consumer expenditure as one metric and think about our potential market size, we then see retail spending, then we get into some payment methods, credit cards, debit cards, e-commerce, and then we look at Pix. And what I find astounding is that by the end of 2021, the volume of Pix in Brazil will far exceed the entire pie of e-commerce for all of Latin America. That's pretty astounding. We're going to look at Pix a little bit more in detail in a moment. And even Pix P2B, or person to business, person to merchant payments, are representing a very decent share of overall money movement in the entire Latin America region. So again, this is all tying back to the theme of money moving in different ways, moving into 2022. And what is also interesting to see is the percent of these different payment methods, what percent they're representing of consumer spending over time. And the most interesting line here to note is e-commerce and how it has grown and how it will continue to grow, eating up more share of total household expenditure, which can be used as a proxy for digitization, a proxy for the decline of cash, a proxy for the migration of the physical to the digital. So again, just to provide a baseline context for what we're going to be talking about today. And as we go to the next slide, with that context, we're going to be focusing on three main areas of payments and money movement. We have observed this year, and what we think will even accelerate next year, is the emergence and rooting of three new payment schemes taking place, all revolving around instant payment. Instant person-to-person payment and instant person-to-business payment. And this is happening in three ways: real-time, intrabank ACH, faster payment via debit card, and what is so far kind of lower penetration, but very well poised for rapid adoption, is cryptocurrencies that will be rivaling or solving pain points that the traditional financial infrastructure has not yet been able to solve. So this is what our conversation is going to focus around. This is what we refer to when we say money is moving, truly moving differently. And we'll go into an analysis of this at a little bit deeper level. So I'm going to ask Andreas to tell us about what we're seeing in real-time ACH, comparing schemes across the region. So happy to turn it over to Andreas.
Thanks, Lindsay. So delving into the money movement, we see real-time schemes really taking root in the region. Let's start by looking at Brazil and Pix, an astounding success case after its launch in late 2020. Pix has enjoyed massive adoption, being used by 80% of Brazil's banked population. And the question here that plagues the industry is, how will Pix impact person-to-merchant transactions? And how will this impact card volumes? Card spend in the country, in Brazil, has recovered almost to its 2019 levels. If you notice on the graph, we see that credit card spend is only slightly down at 4%, even though as a country, consumer expenditures are down 20%. And when we look at debit cards, in the second quarter of 2021, this has surpassed the second quarter of 2019. showing a quite interesting rise, particularly in the context of Pix, which we would have expected to cannibalize debit card transactions. Over the past 6 months, we see that Pix person-to-business transactions have plateaued to represent about 10% of all Pix transactions, signaling that Pix might not cause a significant dent into card volumes, and rather it is taking the lunch of TED, boletos, and most importantly, cash. One thing to note that is important, though, is that Pix is taking on what cards could grow into in Brazil. I want to take this opportunity now to make a comparison that is not all that made all that often. On the next slide, we will look into Costa Rica's Simpe Móvil, a real-time payment interbank solution system sponsored by the central bank, which saw a powerful acceleration in 2020 and quite astounding growth in 2021, growing 3 times its 2020 level. The graph here nicely shows it's outpacing credit and debit card volume growth. Unlike Brazil, the central bank in Costa Rica does not publish these person-to-business or person-to-person transactions, but we estimate that $5.6 billion, or Simpe Móvil is moving $5.6 billion in person-to-person transactions this year. Anecdotally, we know that Simpe Móvil has been used for P2P transactions, but has started to be adopted by merchants, and it's gaining traction. Small businesses, like grocery stores, are signaling on their walls or window displays that they accept Simpe Móvil. But an even more powerful use case or driver that's growing Simpe Móvil's volume are transactions that feel like P2P transactions. This could be like paying your plumber, paying your veterinarian, paying your doctor. The Costa Rican consumers are showing a willingness to pay using Simpe Móvil for low risk transactions, for transactions where they do not expect to have to make a return or do not expect some form of chargeback. Another driver of Simpe Móvil's growth is that it is free to merchants, as mandated by the central bank regulation. Additionally, in Costa Rica, acquirers are required to withhold a percentage of the volume transacted for card payments, and this is not true for Simpe Móvil. This lack of retainer is another incentive for merchants to push consumers to adopt this real-time payment scheme. A key takeaway from Costa Rica is that the costs and tax on the merchant determines the scheme's ability to succeed in the market. Moving on to the next slide, beyond these 2 examples of real-time payments, we must ask ourselves, where else is this move? Where else are these solutions rising, and what other solutions are evolving in the region? The first 2 that I discussed, Brazil and Costa Rica, these successful use cases are strong central bank-led initiatives. Other similar initiatives have been launched in the region and are rolling out. We can look at Argentina's Transferencia 3.0, as well as Mexico's CODI, which has been around for a little longer, but has not enjoyed this success. And that's a whole conversation on its own on the case in Mexico. Aside from the central bank-led initiatives, there are 3 others. And the first one is quite similar to central banks, which is propelled by the clearinghouses or a processor. So an entity that is connected to to various entities or various players in this financial infrastructure. So some examples of this include Colombia's Transfia, pushed by Colombia ACH, as well as another unknown or not well-known use case in Puerto Rico, ATH Móvil, which has been pushed by the processor Evertech and has succeeded in capturing both P2P and P2B flows. The next type of scheme that we're noticing are bank-led schemes. And this is particularly in markets where there is one dominant issuer or a group of issuers come together, forming a consortium and enabling these interbank movements. The most successful example in the region that we've seen is Yape, which achieves these interbank transfers using Visa Direct's debit card rails, as opposed to traditional bank transfer rails. Free in Guatemala, as well as Yapi in Panama, are still in their early stages, but are similar bank-led initiatives, and could very well follow in Yape's footsteps in this privately led, mobile-based, frictionless user experience solution that is a separate brand from the bank itself, but still enabling this real-time interbank transfers. Lastly, this last group that we're looking at are closed loop systems such as Mercado Pago, Rappi, and PagBank, and we'll touch upon this later. But these closed loop ecosystems are up against quite intense competition, and their capability and them remaining closed loop must stand up against this increased competition from interoperability and interbank solutions, and are likely to be crowded out. But of course, these entities are present and they're strong, and they have additional value propositions that add to their space in the market. These conclusions are simply trying to map the region, trying to make prediction on how the region is likely to develop. And we noticed that these payment schemes are growing across the regions and are in early stages in some markets and not present yet in other markets, presenting a nice opportunity to innovate money movement. Now, I'd like to pass on the mic to Tim to discuss the rise of cryptocurrency and its implications on money movement. Thanks for your time, everyone.
Wonderful. Thank you so much, Andreas. And I think that innovating money movement is the perfect point of transition into crypto. So 2020 and 2021 will be regarded as landmark years for crypto uptake. For many of you, it may have been the first, you may have had your first experience purchasing a crypto asset, and the same is true for many Latin Americans. So we present here some data points from a survey that we conducted in Brazil, Mexico, Argentina, and Peru in September of this year, assessing the level of uptake of crypto across these markets. And we find some very exciting and powerful numbers. So the top line number, of course, is that 8% of Latin Americans have had already made a purchase of cryptocurrencies. Now, we should note that this was an online survey, so there's likely to be a skew towards the digitized consumer, but given the high rate of smartphone penetration throughout the region, we're very confident that this, at the very least, shows the rapid onset of this technology among Latin American consumers. Now, this penetration is still quite low, but again, put up against some other financial products that have been in the region for much longer than crypto, we see really striking points of comparison. So on the right here, we can see that the current share of crypto users in each of these markets is coming to rival even credit card penetration. In markets like Mexico and Peru, we see the most the greatest competition against that legacy product, the credit card. And thinking particularly about why this rate of adoption has accelerated, it's for many reasons, but one of them being that it is now much easier to purchase crypto in the region with the emergence of many new exchanges, the entrance of international exchanges, but also the rise of very successful regional exchanges, such as Mexico's Bitso, which recently announced its 3 millionth customer. So many Latin Americans have already entered the crypto ecosystem, and we can see, if we advance here, that many more consumers are interested in doing so. So the segment in our survey who reported that they were interested in crypto but had not yet made a purchase in all markets except Brazil, if all of those potential consumers entered the ecosystem, that would already put crypto ahead of credit card penetration. So in addition to the rapid uptake of crypto, the point to mention, and what we really want to come across, is that crypto has rapidly moved from kind of an edge case or a niche financial product to something that is familiar to many consumers throughout the region and may actually have powerful disruptive impacts on their financial lives. So we can move forward here to the next slide to break these numbers down a bit further. The majority of the consumers who have already purchased into the crypto ecosystem are banked individuals. This makes sense. Many exchanges require a bank transfer as a cash-in method or a debit card, though some exchanges, such as Bitso, are now enabling cash pay-in. So the banked individuals are by and large, the majority of those who have already entered the crypto ecosystem, as well as those who they have a slightly higher rate of interest in entering crypto. But it's very fascinating to see here that the unbanked population actually has a lot of interest in crypto as well, with some 6% reporting that they've already purchased crypto and nearly 20% reporting interest in entering the ecosystem. And when we look on the right here at the use cases that are most compelling to these subgroups of individuals, we see some really interesting trends. So investment remains the most attractive piece for crypto, with many individuals wanting to see their crypto assets go to the moon, as they say in the crypto ecosystem, and make a tidy profit. But the other use cases we actually find more interesting and maybe even more impactful in the financial lives of crypto users in the region. Namely, we see a lot of interest in crypto as a vehicle for protecting savings against inflation. So in markets certainly like Venezuela, but also in Argentina, where there's very high persistent rates of inflation, there's a strong interest in crypto as a vehicle for preserving the integrity of earned wages. And we see an even higher rate in this particular use case among the unbanked, which suggests that many unbanked individuals see crypto as a vehicle for overcoming some of the limitations of cash, so particularly inflation and currency devaluation. And when given high levels of distrust in banking institutions as well as in government regulators, crypto may come to be a more compelling alternative for those who are accessing their first financial account. So this creates the possibility that some unbanked may leapfrog the traditional bank system straight into crypto, which is a fascinating possibility. Moving forward here to the next slide, we also wanted to drill in on what we might describe as pull factors into the crypto ecosystem. So for a number of different populations, we assess here what are the factors that might make crypto more attractive to them, maybe leading them to make a first-time crypto purchase or increase their usage of crypto for different use cases. And some important details to note here. First, the vast majority of these consumer groups indicated that having an international brand enable access to crypto would be the most compelling factor for them in entering the crypto ecosystem. So as Visa and MasterCard roll out crypto-linked cards and other means for accessing the crypto ecosystem, many users or potential users are very intrigued by these possibilities, especially given residual concerns related to the fraud risk or volatility risk associated with crypto. And we also see powerful interest in the ability to spend crypto with a debit card. So as it stands, many crypto account holders don't have a seamless way to convert their crypto holdings at the point of sale. And particularly if we think about Argentines who might be holding their savings in crypto, but would need to spend in the Argentine peso, this possibility of instant crypto fiat conversion at the point of sale through a debit card is a very compelling possibility for many consumers. And then the last point just to mention on this slide is that particularly from the unbanked, there is substantial interest in that international brand endorsement for access to crypto, well above the possibility of accessing crypto through a local bank, which suggests that, again, that some unbanked may be willing to leapfrog the traditional banking system, especially if they can receive that guarantee of trustworthiness from an international brand. So these kind of point to some exciting trends to watch for as the crypto system ecosystem unfolds, especially because we're already seeing many of these factors take hold throughout the region. And so we expect a very, very interesting impacts in the coming months and year. Moving then to this next slide, we last want to mention the point that even as many consumers become more familiar with crypto and may even seek out crypto in and of itself through a crypto wallet, the effects and benefits of crypto will end up reaching many more consumers, even if they aren't aware that crypto is involved in helping to improve the efficiency of whatever financial tools that they're using. So we highlight two very exciting use cases here in which crypto is used to improve user experience in sending money and may not even be with the branding of crypto, which many users may associate with high cap but highly volatile cryptocurrencies like Bitcoin. So on the right here, we present Facebook Novi, which is Facebook's cryptocurrency wallet, which is designed for international transfers. It was launched, I think, 2 weeks ago, with the first use case enabled being the remittance corridor in between the United States and Mexico with a US dollar-backed stablecoin. And so this app is certainly very interesting for the possibility of being linked with popular social media tools and even potentially WhatsApp, which would be a very compelling integration for many Latin American consumers. But it's also interesting to see how this tool has been marketed. So I have actually received some targeted ads for this myself, and some of you may have, and nowhere in the branding do they actually mention that this involves a cryptocurrency. They instead refer to it as a fee-free international money transfer tool or a digital currency tool. So it just goes to show that even as the benefits of crypto might be compelling to these companies and to their potential consumers, they may want to distance themselves from the high volatility, high risk crypto assets like Bitcoin. And then another use case, just to cap this off, that's really interesting to watch, is the integration of Stellar USDC, which is a US dollar-backed stable coin on a very fast blockchain network called Stellar by MoneyGram. So MoneyGram recently announced that they will use USDC. I believe they will enable it at some points as a cash out option into USD, but they will also use this network to more quickly transfer money across borders. And so this is a very interesting development, which shows that even legacy money transfer organizations or financial institutions may benefit from integrating crypto. So these are just some of the many exciting use cases that we'll be watching. But again, the broader point is that crypto, these last 2 years will be remembered as the years where crypto started to move from edge case, from a niche issue, to something that can truly enhance the financial lives of many consumers throughout the world. And I'll turn it back to my colleague Lindsay for some concluding remarks.
Thank you, Tim. All right, so we've looked at a little bit of the data. We've looked at some examples of how money is moving this year and the traction that we've seen take place this year. A couple of thoughts for understanding what might happen next year and how we can be prepared. The convergence of these trends tells us that the future is going to be rail agnostic. Okay, up until this point, we've had primary rails on which networks or payment methods compete. And going forward, we're not going to have just network interoperability, but rail interoperability. And as more and more frictionless payment options become available and consumers get a taste of them, they're going to be even more choosy, selective, and sophisticated and demanding in, I want to pay how I want to pay, whenever I want to pay. And that requires, interoperability among rails. So the companies or the platforms that are going to be most successful are those who open themselves up to a multi-rail strategy. Revolut, for example, is a good example in which they're offering closed loop Revolut payments, as well as debit card payments, as well as international SWIFT transfers, as well as enabling cryptocurrencies. We're even moving into the era of interoperability of blockchains. And just to go back to a point that Andreas made earlier on, this probably means that closed loop systems are not going to be able to remain closed loop. And we even see some regulatory pushes to open up QR codes and make some of these ecosystems that have developed interoperable with the rest of the ecosystem. So enabling multi-rail strategy will be important going into 2022. Okay. Secondly, I want to focus on the next slide when the rise of something that's occurring in almost every market that's very much top of mind with the emergence, this rapid digital acceleration, the emergence of these multiple payment rails and increasing options to participate in the digital economy. We have seen the increase in fintech as a service, banking as a service, even crypto as a service is now becoming available. So it's easier than ever for non-bank entities to participate in this space, offer financial services, provide access to digital payments, have a wallet, develop their own ecosystem. And so we're seeing a rise in competition due to this enablement taking place. But at the same time, regulators are getting very nervous about this rise in third-party white label solutions. And we're starting to see the regulators rock the boat a little bit. We've seen this in Mexico, the CNBV has cracked down on banking as a service or fintech as a service. And so in some markets, it may be actually very strategic, making the decision to go through the headache or the regulatory rigmarole or the cost of obtaining access to a banking license or a fintech license, whatever it may be in the corresponding market, SEDPE in Colombia, for example. And we're actually already starting to see that buying a bank or buying your way to a banking license is actually a decision we're starting to see in Mexico with Walla and e-banks in Brazil. This actually being the path of least resistance to obtain the permission to hold and move money. Now, a lot of companies make the decision, I don't want to be a bank, I don't want to be responsible for holding or actually touching the money. But in many cases, with this increased competition and increased fragmentation, this may actually be a very strategic decision. Okay, and then as we go to the next slide, one final trend I want to touch on, one final prediction that I want to make sure we have top of mind is that the need for a seamless security solution is at an all-time high. Obviously, with increased digitization, we have increased fraud, and especially with the inclusion of new consumers into the digital economy, new consumers, new merchants who have not had yet the experience or the training or the access to security tools makes them very vulnerable to fraud. And actually, a report by Fine Biometrics found that 20% of the digital accounts created in Latin America in 2020 were fraudulent. And so we're seeing an increased need for security solutions and an increased need for frictionless solutions based on biometrics, incorporating digital ID services, seeing identity being transferred into a digital asset as well. So being preventative and being predictive and proactive about fraud helps reduce costs, helps control costs over the long term. And everyone playing in this space needs to have a very proactive and aggressive digital security strategy in 2022, more so than ever before. So a lot of opportunity for innovation in that space as well. And just some closing remarks here before we get to questions. On the next slide, we just want to mention that all of three of the schemes that we mentioned, real-time ACH, faster payments via debit card, cryptocurrency, none of them are a silver bullet. They all have their shortcomings. They all have the use cases for which they are best suited. We don't expect one to beat out all others. We expect them to commingle, and we expect them to compete for the remaining pain points that are still existing in the ecosystem: cross-border payments, maximizing value to merchants in terms of cost and value, again, security, and managing the lack of reversibility that we get with instant payments, and solving for that potential pain point. Continuing to optimize the user experience and adding on value-added services are all going to play a part in this competitive landscape that is new, that is accelerating and becoming increasingly complex into the next year. Okay, so when we're thinking about 2022, there are a lot of strategic questions that we have on our minds. This is just to give you all a taste of some of the things we're going to be looking at in our continued coffee chat series next year, in discussions with our clients, in our webinars. And these are seeds we want to plant for you. And we also want to hear, what strategic questions are you thinking about for next year? So, what impact will Pix actually have on household expenditure? And what implication does this have for my business? In this increasingly complex and competitive environment, what is the solution for loyalty? How can I actually generate and retain loyalty among my consumer base? How can I make money in this low-cost payment environment in which real-time payments are free or trending towards being free? How will the regulatory regime impact me in my market? What type of partnerships do I need to develop to be successful? These are all things that we're thinking about, and we want to invite you to think about with us. And if we go to the next slide, before we get on to questions, I want to take this opportunity. I have a very curated group of folks on with us today. And we want to just take a moment to give you the opportunity, if we're hoping to sit down with you and be proactive about thinking about strategy and research in 2022. What can we help you answer? What questions can we help you illuminate? What insights can we bring? And so we want to either sit down with you in what's remaining of 2021 or maybe in Q1 2022 and flesh this out a little bit and talk about what will be most beneficial for you making these strategic business decisions. So if you wouldn't mind taking just a moment to answer this poll. If you'd like to talk to us now, we'd love to have this conversation and get a head start on the new year. If you prefer to wait, we can have a discussion in Q1 of next year. If now's not a good time for you at all, no worries at all. We'll continue to be in touch. But we look forward to hearing what's keeping you up at night, what's on your mind, brainstorming, shedding light on some of the things we're seeing. As we know, these conversations can be very productive in just getting those gears turning and thinking. So just take another about 15 seconds to get your vote in, get your response in, and we'll take it upon ourselves to contact you and be in touch and get the ball rolling so that you're prepared for 2022. All right, so let's close that out. Thank you, Abel. And about the last remaining 5 minutes, just want to take some time to answer a couple of questions that have come through. I'll invite Abel to come back on and moderate this section. If you didn't get your question in, you can do so now. And we may go a few minutes over if people are still hanging in there and want to stick around for the Q&A. So let's see, Abel.
Thank you so much, Lindsay. Let's take a look at a couple of the questions that have come in then. We have one that's interesting from the crypto perspective. It's from Valeria, and she's asking about, is there any information available in terms of fraud in crypto in Latin America? And so that might be one that Tim could field.
Yeah, absolutely. Thank you, Valeria. So yes, we do have some baseline information about fraud. There are some estimates from blockchain investigation firms like Chainalysis that can range anywhere from 3% of transactions in the region with crypto are fraudulent to anywhere, to 10%. This is a very challenging thing to monitor, though, especially because KYC requirements for crypto account holding at major exchanges are at varying degrees of stringency. This we expect may improve this ability to monitor for fraudulent transactions or money laundering related activities. Especially at the urging of regulators like the US Treasury Department, but we're kind of in a gray area as these technologies develop and as regulators kind of get their minds around how best to monitor for fraud. So to put it simply, yes, there's a lot of fraud happening, and regulators are trying to figure out a better way to monitor for that in the coming months and years.
All right, excellent. We have another question that's a bit more specific, and it's from Lynn. She is asking if, are you seeing any LATAM-centric DeFi applications for lending, borrowing?
For sure. So one of the most basic and original DeFi applications is the stablecoin DAI, which permits the issuance of a US dollar linked stablecoin against collateral of cryptocurrency deposits. That is very popular in countries like Argentina. And there are many other DeFi protocols that are being developed in the region or being expanded to the region. Now, for those who aren't familiar, DeFi is decentralized finance, trying to get into the credit extension space through decentralized blockchain protocols. One of the key limitations that I would just mention of this protocol is that they still these extensions of credit still require heavy collateralization. So it's still not a substitute for many traditional credit offerings, and so that is something that many DeFi developers are still working on. And so there could be integrations in the future with things like oracles to try to include some more traditional measures of creditworthiness, but it's still in its infancy.
And on that note, Tim, this is not related to crypto or to blockchain, but the question of credit is going to be extremely strategic. It already has shown to be this year, as we're going into next year, we're already seeing a lot of experimentation in innovative credit at the POS and for consumers. And the problem, solving the problem for SME credit has been a long-standing pain point, and starting to see increased innovation and experimentation there. But I expect to see a lot of work and investment going into kind of solving, extending credit at the POS for consumers beyond just installments, which have been around in the region for a long time. So finance, very top of mind for neobanks, for ecosystems that are looking to become profitable, looking to make it get into the red or get into the black, looking for new ways to make money and become sustainable.
All right, thanks. Well, we have a question here that maybe Andreas can field. It is how are card spend volumes evolving and varying by market in 2021?
Great, thanks, Abel. Both credit and debit card volumes have increased, as we shown earlier, and traditional markets like Brazil for credit card and Mexico for debit cards are still hold the lion's share of the volumes for the respective cards in the region. But it's interesting to note the rapid growth in both credit and debit cards in Peru. Credit cards grew their volume by 60%, comparing 2020 to 2021, but according to our full year 2021 estimates. And the same is true for debit cards, seeing an increase by 46%. Another massive growth in volume would be Chile's debit cards, which grew over 40% as well.
All right, thanks. Here's another general question. Maybe Lindsay might want to field this one. It's what trends are you seeing in fintech as a service?
Okay, it's a huge topic, and I love this topic. It's really interesting to see. We're seeing, I would point to Brazil and Mexico are two very interesting cases. Brazil is a country where we have many enablers, half a dozen or more fintech as a service enablers who are already working with clients and bringing retailers, marketplaces, even company gas stations who are nowhere near financial services are now being able to offer a wallet, support a debit card, things like that. This is already well underway in Brazil. In Mexico, as I mentioned, on the other hand, we have a regulator who is not very friendly towards this model. And it was interesting at Money 2020, a couple of weeks ago, I was speaking with a veteran of the Mexican digital payments landscape environment. I asked him, what do you think the problem is? And his response was, the regulators simply don't understand it. That's one opinion. I don't know if it's true, but there's a lot of misconception about the risk of a third-party white label solution being offered to an institution that's not actually holding the funds and providing lack of transparency to the consumer. So still a lot of work needs to be done to illuminate and help and understand this model and help everyone get on the same page in terms of liability and risk. So the regulator very much has a big piece to play, but nevertheless, we see this pushing and growing, and it will all flow and move according to consumer demand, user experience. Whoever is able to provide the best user experience is what consumers are going to want to demand, which regulators will inevitably have to respond to.
All right. Thank you, Lindsay. We have another question from Adam that looks like it refers to an earlier point in the presentation, and it is for sending and receiving money to and from abroad, what percentage of that is for remittances versus purchases? think that's referring to one of the data tables from earlier on.
Yeah, that, it's a great question in terms of understanding total, breakdowns. When we think about money being sent through, not thinking about an e-commerce purchase, but money being sent cross border, it's when we're thinking about consumer payments, it's almost 100% remittances. Today, we're starting to, there is a small percentage of that that's used for, a bank transfer to pay for high ticket purchases like education or health insurance or some large travel expense. Bank transfer for cross-border purchases from consumers is still a small portion of that pie, but you have companies like Flywire who are enabling bank transfers for cross-border payments. You have some other innovators in the space trying to solve for cross-border purchases, and we'll see this mix change over time as borders increasingly start to fade and there's increased demand for cross-border trade. And I just want to mention, we advertised this session as 45 minutes. We're over time now. We have several more questions and a good contingency of folks here. So we'll keep going. If you have to drop off, thank you very much for being with us today. We'll be in touch with the webinar materials. We'll follow up with you if you answered our poll, and we'll stay on for a few minutes longer to get to all of our questions.
All right, excellent. So we have another one from Claire here. Do you think that the adoption of crypto into the mainstream is setting LATAM up for a big bubble bust? And if so, how can that risk be mitigated?
So that is the all-important question, Claire. I think that this is certainly always a risk with those high cap, highly volatile crypto assets like Bitcoin and ETH, though they have seen some pretty impressive price gains in recent weeks. There's always the possibility that they will fall again. So I think that with those crypto assets, there is certainly a substantial risk associated with them, particularly for the average consumer who may not fully understand the risks and potential trade-offs. What I would say is that how we see it is that the more transformative impact in the near term with crypto will come through more stable cryptocurrencies or more infrastructure-oriented crypto integrations. So certainly stable coins have a very powerful growth potential in the region, particularly to give access to more stable forms of holding funds, holding value than regional currencies, but also with speeding up money transfers and particularly remittances through things like faster blockchains or USDC, Stellar, and similar digital assets. So that's just to say that there's certainly risk involved, but the lower risk, higher impact integrations, I certainly think will be here to stay.
All right. We have another one from Veronica, which was asking, who would be the most friendly regulator in LATAM towards technology acceptance?
Okay. Great question. How do I answer this? Couple of different ways to think about this. Brazil certainly has a very fintech forward regulatory environment. They've enabled, it's relatively easy to get a license that enables you to do a lot of things that you need to do operating as a fintech. They have supported banking as a service, implementing open banking. Of course, Pix was rolled out very successfully and is overall considered to be a very well done job by most folks in the industry. Overall, Brazil has a head start, having started the move towards interoperability of card networks a good 10 years before many of the other markets. So Brazil is certainly, there are challenges in Brazil, we know, but in terms of fintech regulation, a pretty positive environment. A place like Colombia, where the positive thing about Colombia is that the rules are clear. there's been, in terms of obtaining a license to be able to hold funds and move funds, to get a SEDPE license, it might take 2 years and it might take a hefty investment, but at least the rules of the game are clear and what I have to do is clear, and there's no uncertainty around what is allowed and what's not. The challenge in Mexico is that it's very uncertain. The regulators have come out with surprise warnings or penalties, have changed the narrative on how they're approaching these different fintech evolutions. Mexico has had a fintech law in place now for 3 years, but very, very slow in actually giving out the licenses related to that law. So Mexico is unfriendly in the sense of the level of uncertainty. Another way to look at that question is how are regulators promoting digital payments from a tax standpoint. So Colombia, while we spoke positively about it in a moment, still has the 4x1 tax on all financial transactions. Costa Rica, while the retentions for card transactions may not be viewed very positively by some, they're not, the president and the regulators have come out to say, we're not going to put this retention in place for Simpe Mobile for now in an effort to continue digitization of the economy. So a couple of ways to look at that. Those are some examples. Hopefully that provides some insight.
All right, thank you, Lindsay. This one is more of a crypto specific type of question. It's from Rafael. He's basically asking, as the cost of moving stable coins to fiat are still prohibitive, do you see a strong case for export-import companies moving to stable coins and replacing traditional fiat?
Yes, that is an excellent question. And the answer is yes. I think that anyone who is moving money cross-border has a strong case for using crypto instead of their traditional payment methods, certainly with the faster speeds that crypto can achieve as compared to some more traditional payment methods, but also potentially lower costs. Where I think that will hinge is on the price factor. You, Rafael, mentioned the challenges of converting from stable coins to fiat. So many crypto exchanges or crypto providers will still charge a fairly hefty fee to convert or to cash out. So I think Coinbase, if I'm not mistaken, has around 2.5%, 3% fee for conversion. That we expect to see some downward pressure on that as some crypto exchanges and crypto providers are starting to move those prices down, though we still expect some cost associated with conversion, especially due to the costs of custody for crypto assets, as well as anti-money laundering due diligence costs. But the point that I think is really important to mention here is that even as you may see some high conversion costs, the transaction fees, the potential of stable coins to reduce those fees is substantial. So for example, I mentioned Stellar USDC, which is a very well-regarded stable coin on a blockchain network that has practically no fee for transactions. So it's, I think, a thousandth of a cent per transaction with settlement in near instantaneous speeds. So that, even if you do have a conversion fee in the near term, that's higher than what you'd see for cash in or transaction costs for traditional methods, you might see some of those, the bottom line improve based on those reduced transaction fees. So I think there is a great case for uptake. It just depends on cost and also businesses' willingness to delve into this newer technology area.
All right, thanks so much, Tim. Well, I think we're pretty much out of time, so we're going to have to wrap this up for today. We really want to thank all of you for coming out today and hope that you enjoyed this executive session and found it illuminating, and hope that we can offer you more soon and tackle some more questions as payments continue to evolve in Latin America. So thank you so much. We're going to sign off for now and have a great day.